Today, the European Parliament backs the world's first comprehensive rules for crypto. Coinbase secures a license to operate in Bermuda, and Circle's chief strategy officer lays out how stablecoins could replace fallen banks like Silvergate and Signature. Welcome to CNBC's Crypto World. I'm Jordan Smith. Investors are keeping the pressure on the crypto market. By noon Eastern, Bitcoin tumbled to the $28,000 level, while Ether dropped further below the $2,000 mark. Meanwhile, Cardano fell to 41 cents. Today's losses follow those declines in the crypto market yesterday. Noelle Atchison of the Crypto is Macro Now newsletter pointed out that there isn't any negative news or macro data that would drive the selling pressure we're seeing. Instead, she pointed to a large sell order on Binance that pushed prices down, and that sharp drop is a reminder of the market's current low liquidity. All right, let's talk about the top stories. First up, the European Parliament overwhelmingly backed the European Union's first set of rules for crypto markets. The Parliament voted 517 to 38 in favor of new regulations for issuing and trading crypto assets. The rules will be rolled out starting in the middle of 2024 and will require firms that issue and trade crypto to be licensed by a national regulator, essentially giving them a passport to serve customers across the 27-member country bloc. Also, major service providers will have to disclose their energy consumption. Stefan Berger, the lawmaker who guided the rules through Parliament, argued that the regulation brings a competitive advantage for the EU, given the region's crypto industry now has regulatory clarity that doesn't exist in other countries like the US. Next, Coinbase just secured a license to operate in Bermuda. The US crypto exchange made the announcement in this blog post yesterday as part of Coinbase's goal to scale globally. Coinbase noted that Bermuda was chosen as an international hub given it was, quote, one of the first financial centers to pass comprehensive digital assets regulation in 2018, and its regulatory environment is long known for a high level of rigor, transparency, compliance, and cooperation. According to the blog, the exchange is also in talks with financial regulators in Abu Dhabi about a potential license. Earlier this week, CEO Brian Armstrong argued that crypto firms will develop in offshore havens unless the U.S. offers regulatory clarity. Regulators here in the States have been stepping up enforcement action against crypto companies this year. Just last month, the SEC threatened to sue Coinbase over some crypto products. Last, the bulk of the deal between Voyager and Binance US can move forward. CoinDesk reported that court filings from yesterday suggest the majority of the $1 billion deal for Binance US to buy assets of the bankrupt crypto lender could continue even before a legal appeal is worked through. Now, Voyager's official committee of unsecured creditors confirmed the development, tweeting yesterday that the crypto lender, the UCC, and the government reached a resolution. The government has agreed that the plan can proceed without the contentious exculpation provision and will not otherwise be subject to the stay. The development comes amid mounting concerns that the buyer could back out. All right, on to our main story. Circle's chief strategy officer, Dante Disparte, testified in front of the House to explain the role stablecoins play in the economy and to push for the regulatory clarity so many in the industry are urging lawmakers for. Crypto World's Mackenzie Sigalo spoke with the Circle exec after the hearing to get his take on the uses for stablecoins and the potential for a U.S. digital dollar.
So you just testified before the House Financial Services Committee earlier today. Walk me through what you brought up in your testimony.
Well, one of the main points I wanted to bring up in my testimony today was the fact that the United States, among all of the advanced economies in the world, is an outlier in not having a charter at the federal level for payment systems and payments activities. So that's really one of the big gaps the U.S. has when it comes to economic competitiveness in this space.
And in terms of a U.S. digital dollar or some sort of U.S. CBDC, where are we? There have been conversations for years, and there have been pilots of a digital dollar. I know Chris Giancarlo's played a role in that, but lay out the scene. Where are we in terms of progress towards a CBDC in the U.S.?
Well, the digital dollar efforts in the United States, I think, follow the exact same efforts that you see among many central banks around the world. In total, 114 central banks, representing something like 95% of world GDP, are thinking about what are the options, the risks, and the benefits of potential central bank digital currencies. Here in the US, however, just like all other issues with fintech and digital assets, the central banks of the United States, the Federal Reserve System, needs congressional authority as well to actually issue a digital currency. And so we're far from a digital currency being issued in the US. And frankly, in our view, the very better option would be to legitimize payment stablecoins or dollar-denominated payment stablecoins as effectively a private sector answer to the need for the dollar to be a digital currency on the internet.
And for someone who isn't as well-versed in how the stablecoin market compares to, for example, the U.S. digital dollar that's been piloted, how would you explain something like a USDC versus this digital dollar that's been tested out in certain markets in the U.S.?
Right. Well, for one, a central bank digital currency does not exist inside the United States. And so in many cases, there was a project run by the Boston Federal Reserve Bank known as Project Hamilton, which has been an experiment in looking at fast, high throughput payments and the technology platforms that might be necessary there. But there were some conclusions that report and findings came out that any U.S. central bank digital currency would have to be privacy preserving. It would be intermediated, so it would come and be made available through intermediaries like banks and non-banks. And then lastly, you would have to satisfy know your customer requirements. And so those same types of parameters can exist, and they do exist today with something like USDC, Circle's dollar digital currency. And so begging the question, what is the most appropriate pathway for a US digital currency and for the United States to compete? In our view, the better model would be to permission non-bank actors inside the payment system, whether for FedNow or for master accounts at the Fed. That's the place where the U.S. has the biggest gap.
You know, there was some concern the weekend that Silicon Valley Bank folded. We saw Circle, the U.S. dollar, its U.S. dollar peg stablecoin, USDC lose its dollar peg for a period. There was some concern over that 48-hour window. It eventually was reinstated when we saw that the Fed was going to step in to backstop SVB and Signature as well. But what do you have to say about what we saw in those few days and what that means in terms of like placing your faith in a dollar pegged stable coin that isn't issued by the Federal Reserve?
Well, herein lies, I think, one of the interesting pieces of the puzzle, which is that Circle, not unlike other major payments companies in the United States, as a fiduciary and as a regulated money transmission company, we are obligated to partner with the commercial banks. In effect, you could argue that USDC imports the full faith and credit not only of the U.S. regulated banking system, but also by extension, we're answerable to the Federal Reserve and the banking regulators as well. And so the bigger issue with the three bank failures we saw in the United States, Silvergate, Silicon Valley Bank, and Signature Bank, was actually a systemic issue inside the banking sector, much more so than an issue in digital assets or crypto introducing risk to banks. And so that's why you saw such an unprecedented federal intervention, is that small to mid-sized commercial banks in America would have faced an extinction level event, but for that intervention. The distinction is we live under a model of transparency that doesn't take bank holidays. And so Circle reported the exposure to Silicon Valley Bank. We also made a promise that if need be, we would use our corporate balance sheet to bridge any shortfall. And sure enough, on the Monday afterwards, we were back in business without any issues.
You know, I do think it's interesting. You mentioned the fall of Silvergate and Signature. Both offered a 24-hour payment network that made it possible for a lot of these crypto firms to settle trades outside of business hours. There's been a lot of talk that USDC could now become, play a bigger role in terms of this payment network, 24/7 facilitator of these non-business hour trades. Do you see more crypto firms coming your way, more people choosing to settle transactions with you now that they don't have the Silvergate Exchange Network, now that they don't have Signet through Signature?
Yeah, well, indeed. I mean, I think that is, in fact, the superpower of a digital dollar like USDC, is that it is always on, it's at internet scale, and it functions with price parity to the dollar. The key point that all of us really care about deeply is interoperability with traditional banking and payments. That without a bridge, many aspects of the digital asset economy might be self-referential with no on and off ramps. And so Circle, literally for the 10 years we've been operating and for the 5 years we've operated USDC, we've gone to great lengths to ensure that there's constant interoperability with the banking and payment system. You see that with integrations with Visa. You see it with our worldwide partnership with MoneyGram, which allows people to show up with USDC at a MoneyGram location. And subject to the local effects, they get their they can present USDC as a dollar and effectively have a currency exchange take place at MoneyGram around the world. This type of interoperability is hard fought, but it's also a function of how Circle is regulated, how the market trusts us, and ultimately our view that we could have interoperability with traditional finance.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.